Hi everyone, how are you? It's Leah Koss with the Mortgage Center. As many of you probably already know, I work a lot with people, investors as well as tenant buyers who are looking to do lease to own. Now what is lease to own? It's basically the same as leasing to own a car, except you're doing it with a home. And for people who are interested in the possibility of being the person who leases the house to own, the most common questions is obviously who's a good candidate and what criteria do they need to meet. Well, it's important to know that at the end of a lease contract, so say for example you get a 3-year lease, at the end of that 3 years you need to be able to qualify to buy that home. Otherwise, what's the point? You still need a mortgage. You're still having to go to a regular mortgage lender, whether that be a bank or non-bank. So it's important to know that there's certain factors, if those factors that are holding you back from getting a home now, if those factors are not going to change 3 years from now, you're still going to be encountering the same problem. So let me go through the 5 criteria that a lender looks at when you're looking to buy a home today, because it's going to be the same criteria that they're looking for later on. And then I'll go through which ones of those criteria you can have missing right now that can get fixed so that in 3 or 2 years time you can in fact buy your lease-to-own property. So the 5 criteria that banks look at is obviously your income. They want to make sure you can pay the bills. They're also going to want to know what debts you have. So, you know, what's already cutting out from your income. They want to know about down payment. Where is that coming from? Is that your own money? Is that savings? Is it a loan? Because that's going to impact things. That's basically another debt. They're going to want to know about your credit. And then lastly, they're going to want to know about the property. Okay? So those are the 5 factors. Now, what factors can obviously change? Well, when it comes to the property, that's something where you know, it's going to be obviously a case-by-case situation, and obviously the house that you go to buy, you're going to want to make sure it's a fairly safe house. You don't want to be dealing with anything too risque, because if policy changes on something where, for example, if it has knob and tube, you know, interior parts of the home, or if it's previous grow-up or something like that, you just want to keep it simple. You want to get a home that doesn't have any weird quirks, okay? But other than that, the other 4 things that are in your control and have to do with you personally, that probably has prevented you from getting a home. So the first one is credit. Credit is one of those things where if you have bad credit because you've declared bankruptcy, or you've got a bad track record, or you were young and nobody told you about credit and so therefore it got a little smashed up, with credit, with exception of some things where, you know, it takes 30 to 60 days to cure it, there's no real middle ground. Either your credit takes 30 to 60 days to correct because it's something minor and it's just going to boost your score up a bit, or if your credit's really bad, time is the only thing that will heal. So because of that, lease to own would be a great option for you if you just need time on your side to correct your credit. If it was a bankruptcy, let's get you with a secured credit card and let's start building your credit back up, and you know what, in 3 years you should be fine to buy that home so long as you followed all the steps that I would lay out for you and what you need to do to fix your credit. Okay? So if you are a candidate with bad credit, you are perfect for lease to own. If you don't have enough down, what is this one? This one's down payment finger. If you don't have enough down payment, lease to own could be good for you. For many of you, especially if you have kids, you know, maybe you have 2.5, 3 kids, and you can only afford, you can qualify for a home, but the problem is you can only qualify for maybe $200,000 or $300,000 simply because you don't have enough down payment to buy a $500,000 home, which would be ideal because then you have enough rooms for all your kids. This is also a great situation. With lease to own, typically, you know, some of them will say you can do 0 down, but I don't encourage that. I do encourage having at least 3%. With lease to own, especially the people that I work with, you only require 3%. Of course, you can give them 5%, which is also great, but if you don't have 5%, then this can be a great option, and lease to own would be a good option for you if you're needing a home outside your means. This one is the debt finger. So what is your debt? Again, sometimes time's the only thing that will heal debt. Maybe you've got massive student loans. Maybe you have a huge car loan because nobody told you to get the house before the car. The car is always easier to get a loan on than the house is. And once you get that $500 a month car payment, it's really hard to get your mortgage payment, depending on what you make. So with debts, sometimes, again, time is all that you need to pay off those debts. And in that situation, again, you would be a great candidate for lease to own. But it's important for you to know that it is on your onus to make sure that something changes from the start of your lease term to the end of your lease term. You must be paying down your debts. And again, I can lay out a plan where if you do X, Y, and Z, you'll be good to buy at the end of your 2 or 3 year term, but if you don't follow those rules, it's out of my hands. Last one is income. I left this one for last because this is the one thing where if it tends to not change over a 3-year term. Now if you're a student who's just gotten out and you're starting to move up the ladder, it's very risky for you to say, well, I only make 35 grand today, but my goal is in 5 or 3 years to make 50 grand. That would be nice, but what if you don't? Now you don't qualify for that home and all of your lease credits have gone out the window. It's a bit of a risky situation. As well, for people who are self-employed and they're going, well, this year was really bad, next year will be better. It's also not a very good bet. If you're salaried, obviously, I mean, you might get a bit of a raise, but is it going to make that much of a difference that you can qualify for the home that you want? Income tends to be the one where if you're just not qualifying for a home because you don't make enough money, I would say you are not a good candidate for lease to own. The only time that might not be the scenario is if you've just started your own business and therefore you just need a couple years under your belt or something like that, then maybe. But otherwise, the other criteria, great for lease to own. The income one, not so much. So if you don't know what category you fall into, or if you just are curious whether you can qualify altogether for a home on your own, or if you can't, is lease to own a good option? Give me a call. I have no problem sitting down and analyzing your situation for you, letting you know what I would suggest, and also putting you in contact with people who can help you to get into a lease to own property. So Leah Cost with the Mortgage Center, always happy to help. Give me a call if you have any questions.